What's up, everybody? Welcome to the View from Jamestown podcast edition. This is episode 104, and it took us 103 episodes to have Steve on the show here, but we are happy to have Steve Lewandowski joining us this morning from much sunnier or warmer Houston than it is up here in the Northeast. Steve, I guess good afternoon, and how you doing today?
I'm doing great, Ben. Yeah, the weather's really nice. We did have a couple cold days earlier this week, so it didn't get above 65, but summer's coming.
Cold is a relative term. Cold, down in your neck of the woods. But no, we're excited to have Steve. So Steve is the Vice President of Global Olefins for Chemical Marketing Analytics by Opis, which is a Dow Jones Company. Obviously the same umbrella that our good friend Kathy Hall falls under when we have our quarterly check-ins with Kathy. But for those that play in these markets and have been to some of the Opis trade shows and conferences and things like that in the past, I'm sure are familiar with Steve and have potentially even seen a presentation by Steve in the past. But rather than myself trying to do it, Steve, why don't you introduce us both to yourself and to the organization?
Yeah, so I've been here with this group, Chemical Market Analytics, since we were brought into the Opis family under Dow Jones, but even another 10 years with the predecessor company. Before that, I come from industry, so I've worked in plants, I've worked in commercial roles, I've done business development. I'm a chemical engineer by training with an MBA in finance and economics. So I'm a dangerous chemical engineer. In my career, I've been very fortunate. I started my career in a refinery and then moved into petchem. So I've done aromatics, I've done crackers and ethylene and propylene. Less so downstream, but really kind of focused on, that middle part of the chain. I always say we're sandwiched between the economy and general consumption and the energy guys on what they want to charge for feedstocks. And we always have to reconcile both sides of that equation and build where we need to build and produce where we need to produce and trade and flow by boat where we have to flow. So it's pretty interesting. I've been fortunate, and it's just a great industry to be in.
Yeah, that's a great comparison. I'm always up for a good sort of metaphor, if you will, and that's a good comparison of kind of where these, where you fall in the supply chain. So really interesting. With your day to day these days, what do you spend a lot of time on? What does your average day to day look like? What are some of the key things you're keeping a close eye on?
Yeah, so I'm fortunate I have a good team around the world. So we have boots on the ground in China and Singapore, in Germany, the UK, and of course here in Houston. So we have a strong team really, talking day to day with the clients, the producers, the consumers, traders, the finance section. And, the big news is a couple fronts, but probably the biggest is just what's the state of the global economy, what's going on in geopolitics. I gave a presentation the other day and I said it's kind of a foggy outlook for me right now. I'm just not sure with all the geopolitical tensions, whether that's Ukraine and Russia, whether that's what's going on in Israel, still a lot of noise out of Northeast Asia between Taiwan and China. Now the Suez Canal is having issues moving boats through. So there's a lot of tensions out there purely from a geopolitical perspective. And we have a lot of elections, right? One's coming up in the US, one just happened in Latin America where this guy is just tearing down the house and rebuilding. And it's, we're dealing with all this uncertainty. And I think, the WEF has done what they're trying to do with Davos and, kind of controlling carbon and all these things. So there's a lot of these short-term issues and a lot of ambitions to start, setting up new laws and rules to play by, which will impact folks for the long run. So, just from geopolitics, it's tough. And then just the state of the economy, right? Inflation's there, recession's there. I was telling you earlier, every time I read the news in the morning, there's one analyst that's saying, the sky is falling. And the next analyst is saying, rainbows and pots of gold for everyone. And how do you pick, right? Their arguments are, kind of good when they write their articles, but you got to kind of bring this all together. So where's interest rates going? What's going to happen with the money supply? Where's debt levels for consumers is always an issue. Have they depleted their savings? How's this going to play out? Because at the end, we're about demand of widgets made out of synthetic materials, plastic. And if people don't have money because they're paying for fuel or paying for gas or paying for food, the demand for some of the stuff we make, the durable goods, kind of slows down quite a bit. So all these tensions between the economy and geopolitics are probably kind of at the forefront.
That's it. So there's really not much going on, is what you're telling me. Pretty quiet out there.
Yeah, exactly. Everyone's happy.
Yeah. It is amazing. I think.
Yeah, for our space, it's pretty good, right? Because everyone wants to know, what is everyone else doing? So the beauty of our business model is we hear a lot from a lot of people. We try to aggregate that and make a message that says, okay, here's what's going on as we see it. It could go this way, it could go that way. We're not sure, but at least we give a sense of what's going on and how these key drivers play out.
Sure. Yeah, I think one of the things one of my big takeaways from, I guess, hosting this podcast over time is, that there's always stuff going on, right? You're always talking about all these things happening, and like it almost seems like everyone's waiting to get back to a sense of normalcy and calm and all this. Everything's even in the world, and that's obviously never the case, right? There's always, whether it's geopolitical things or ocean freight or demand up and down, supply up and down. There's always something to wrap your head around, and they all play an equal role in planning businesses everywhere, and obviously that's a big piece where you guys come in is being able to kind of aggregate all that, like you said, and figure out what the kind of general mood out there is, and try to give some guidance for what's to come and how people should be kind of planning their businesses.
I gave a presentation and I did comment, there's only one consensus, and that is that there's no consensus.
Yeah. Yep.
Everyone believes it's going to go all over the place, and that's something we're having to deal with.
Yeah. And all those things happening, it can be difficult to make decisions, business-wise on a day-to-day level, never mind trying to plan investments and 2, 3, 4 years out. And do we need a plant here? And do we need to invest in this avenue or whatnot? So, it's difficult on a short-term basis and nearly impossible with everything going on trying to make a successful strategy for, 2, 3, 4 years down the road. It's amazing.
For sure.
Well, I guess getting into some of the specifics. So, obviously there's a lot of uncertainty out there. We're seeing it as well. It's amazing how much of our business is driven by some of these geopolitical factors, the elections, whether or not, some of the policy will stay, some of the investment that, the Biden administration has put into place and things like that. So it's amazing how far downstream a lot of this can go and makes a big impact. What are some of the key feedstocks and derivatives you keep a close eye on and what's kind of the current happenings with some of those?
Yeah, I mean, everything really starts with oil, oil and nat gas, and then the NGLs that come with it. OPEC Plus has gone through quite some gyrations trying to get some price support. I think crude oil has been pretty volatile. Our feedstocks, 70% of the cost of making most of what we have is in the feedstock. So we're really dependent on what's going on in oil, but there's been a lot of disconnects with oil and gas. So the gas in North America is running pretty low. I think we're below $2 in MMBTU. Just to put that in context, when the conflict started in Ukraine, I think we were up to $10 or $12 in MMBTU. So in the winter season, nat gas this low is kind of really an outlier relative to history. And crude is looking for direction. I think just from a demand perspective, from COVID, there's been some recovery in gasoline, jet, and diesel. We shut some refineries down. Margins were relatively strong, but we've seen that kind of fall off partially because assets are running better on the refining front, but demand is off as well. So that's creating some challenges in the refining sector. I think Aramco actually went out and started putting some discounts on crude just to make it go away. So where does it ultimately play out? We'll have to watch. And of course, the Suez Canal issues and the Houthis and boats having to take longer routes is creating more volatility. And volatility for petchem feedstock guys is not a great thing. LPGs, North America, pretty cheap. I mean, we've got a lot of LPGs that came with shale. We're the biggest exporter to the world. But it's looking for a home. Panama Canal is another issue. It's not geopolitical, but it's about rain and water levels and getting boats through the canal. And now they're having to sail around South America or Africa to get where they want to go. So that's, tying up the logistics systems a bit. So we got plenty of propane and, naphtha in North America is tied to nat gas. Nat gas is cheap. So our ethane on a cost basis, we have a pretty decent advantage. With that said, with oil, naphtha, the other main feedstock into ethylene, the big basic chemical, is naphtha has been pretty weak because a lot of these refineries have been topping a lot of extra crude just to make gasoline, jet, and diesel, and they're getting some co-product naphtha that has to find a home. And the crude slate in general, we did some analytical work, and the crude slate in general has gotten a bit lighter. North America is putting a lot of oil out that's really light. I think Saudi's made some changes into this crude it's delivering. I think some of the heavy crude providers, Mexico, Venezuela, have slowed down a lot in their production. So light oil's out there, heavy oil's not, and it's just created a lot of issues for naphtha. And so naphtha's been really weak in Asia. Normally it's about equal in price to crude. It traded as low as $50 a barrel below. Today, I think it's range bound between 7 and 15. So every day is a different day depending on how much crude moves. So, I'm watching crude and naphtha closer than I'm watching ethane in North America, quite frankly, because I'm looking for that naphtha push price to go, the price to push up. And with that price lift, it makes the cost structure go up, makes the products have to price higher just to cover their costs, and it just increases the advantage in the Middle East and North America. So that the biggest driver I'm watching is Asia naphtha price and the supply demand on that front.
Yeah, it's amazing, even getting into the sales aspect, you talk about buying and selling product and talking to customers, you never think you're going to become a logistics expert and looking at maps of ship routing and, this ship's now going around this way, it's going to be extra 3 weeks and whatnot. It's, you feel like an air traffic controller sometimes trying to figure out, where a ship actually is and where your product is. It's amazing how you mentioned the logistics piece. It's amazing how that's been a massive topic and trend and really, I expect to be a continued impact for months to come.
Yeah, it was interesting. During COVID, we were worrying about the actual container boxes, and they weren't enough in the right place to load and move around the world. Now we're worried about where's the ship and is it going through a canal or is it going around a continent? And that 2 to 3 weeks, it matters if we're a just-in-time kind of operations.
Yeah, it plays a big impact. We talked a little bit about kind of the global marketplace and specific to petchems. The fact that the globe's a bit overbuilt. There's a lot of capacity out there, and the demand as it sits today, kind of isn't there to fulfill it all. What are you seeing in some kind of specific things on the global market in terms of production and demand that's out there?
Yeah, I'd like to share that when demand is soft, and if it was even at historical levels, we probably would be in the same kind of margin world that we're in. So we've added in the last 3 or 4 years, probably 7 or 8 years worth of capacity, and it was a lot in China, quite a bit in North America, a little bit in the Middle East. So we just added, and this is for ethylene and for propylene. Most of the new propylene is really kind of China-centric with all the new propane dehydro units they built. So we just overbuilt. I mean, for whatever reason, and I don't think it was because of the demand outlooks. I think some of it was strategic, right? North America, we built with an advantage feed. China built because they're a net importer of ethylene and propylene equivalents, and they can build cheap, import feedstocks, and add value through, feedstock through product at a much higher level than they could buying pellets, for instance, or some kind of intermediate. So strategically, it made sense for them. In the Middle East, it made sense for the reasons they have advantage feed. And the world just built too much. Even if we didn't have these conflicts, even if we didn't have COVID, we were going to hit this margin wall just because all this extra capacity came. And we're just having to work through it. And I just don't see a world where a lot of people are aggressively looking at shutdowns. There's some. Permanently shutting down assets is a challenge. If you're a single operator, you're going out of business if you shut down. If you have multiple sites, maybe you optimize a little bit. But then there's environmental concerns, social concerns. It's difficult just to shut stuff down. So we see a world where operating rates are going to be low and margins regionally, high cost feeds, naphtha in Europe and Asia, their margins are going to be weak for a long time. And then North America, Middle East will ebb and flow with oil, naphtha prices, and the continued lower price feedstocks that we can push products to the market. In North America, I think we've been really breaking records month after month, exporting contained ethylene. Ethylene's really more of a global commodity than the propylene and its derivatives. Some propylene moves, but not to the extent of ethylene. So, the propylene market's more America's based and not, America's to Europe or to Asia, whereas ethylene goes everywhere. And I think as assets that continue to ramp up and start up, we've had a couple, Shell and Monaco is still working on startup. I think Nova and Sarnia is working on their startup. Baystar is working on their startup. As all these units start up and the operators get comfortable, we have more pellets. They were built on an export model, so we have more pellets than we definitely can consume domestically. And we see this trend of more and more material leaving the U.S., going somewhere else, which means someone else is going to have to cut back for delivering stuff at a lower cost, and they're going to have to figure out how to manage that.
Sure. Yeah, and obviously we talked, looking at the world, but then looking specifically at North America, I know you mentioned kind of as we started talking that, North America is at a big advantage these days. Obviously I think we've been one of the best performing economies. There's been a lot of folks looking towards the Americas, especially, the last year, 18 months, a lot of folks are looking to put product here because we've been one of the better performing economies compared to the rest of the world. So obviously I know you mentioned you see North America at a big advantage for a few different reasons. What is your outlook on kind of North America versus the world?
So, our biggest concern about North America, I think we could have plenty of propane and put in a lot of PDH units. The problem is you'd have to clear it further and further away. And I think propane moves around the world readily. So it's unlike ethane that has a harder time, moving on a global basis. So I don't think we're going to build a lot more PDHs. We're still watching closely what happens to fuels and energy transition and EV adoption, et cetera. But we still think, this region will have plenty of propylene. But, the ethylene is the one that really is going to look to the advantage. But oil production will slow, gas production will slow, NGL supply will slow. We're building export facilities to move ethane offshore. So not only have we built demand by building crackers, but we're also building demand for ethane via ethane export terminals. And there's some new crackers coming in Europe. There's some new crackers coming in Asia. And there's, some, 300 to 400,000 barrels a day potentially of ethane that could be exported over what we're doing already today. So that's a big interest to me, because I could imagine a midstream guy saying, yeah, let's get this ethane price up so I can make money on all my ethane. And, the competitiveness of the domestic assets will be challenged on the export basis. As you raise the feed, we can't compete in an oversupplied world. Does that have any implications for our operations? That's kind of the things that keep me up at night and the questions that kind of
Sure. Yeah, and obviously that all goes hand in hand. You see a lot of the headlines, people talking about building new chip factories here in North America. I think there was an announcement today that there was some $1 billion investment in additional chip factories here. So, we're kind of expanding this whole reshoring capacity or trend where it's, building more production locally, not having to worry about, exports and things going across the various oceans. So that obviously plays, especially if you have a economic interest in the Americas, obviously that's, if you're based here in North America, that's music to your ears, because obviously sounds like a region that has, room to grow when you look at comparatively versus Asia versus Europe, things like that.
Yeah. EVs is really key, right? How does that play out? Is it going to be only light duty vehicles? Well, what will translate into heavy duty vehicles? We know, airplanes are going to still have to use jet fuel or, SAF to fly. So we know there's going to be some, fossil fuel based demand for jet, but how do these markets evolve? Because then it boils down to feedstocks. If EVs adapt like some folks think, which is pretty aggressively, and we lose a lot of oil production, well, what comes with oil is the ethane, the propane, the butane, the other feedstocks that all of a sudden don't produce the oil. You're not going to produce those. And if you don't produce those and you still have that same chemical demand, you're going to have to go back to naphtha, which is a heavy cost feed. And, it creates a whole new dynamic about making naphtha on purpose. Today you make naphtha, it's kind of a co-product. In the future, it could be an on-purpose product, which means anything on purpose has to have a higher value than the feed, the crude oil that you start with. And I think that's just the piece of the puzzle we're really looking at. What happens to oil, and then what happens to petchem feeds, and how do we bridge from point A to point B with this aggressive energy transition? And chips are a sign, and we're watching how that works, and batteries and windmills in green. But I look at the carbon footprint regularly too, more from a strategic long-term perspective. And there's still a lot of population that uses very, very little electricity, which you could imagine as those developing regions continue on that spectrum of development, they're going to want more. And, wind and solar just aren't the answer, or hydro. So maybe nuclear, but, so we're going to need more fossil fuels. So it's, again, this ebb and flow between growth and developing regions growing, developed regions pulling back a bit, and where does that balance ultimately play out?
Sure. Yeah, we were at a conference, I guess a couple months ago now, and there was a presentation by an automotive guy, and it was very interesting because it obviously impacts, especially our world very closely for a variety of different reasons. And one of them was talking about the trends with, how many electric vehicles were sold on an annual basis, up, down, sideways for the last year, 5 years, 10 years. And there was one stat, and it was something like 65% of folks that have bought an electric vehicle, their very next purchase went back to an internal combustion vehicle. And it's such an interesting thing because it's, electric vehicles, I think, are this kind of hot topic and trend, and everyone wants to talk about them. And there's very cool things happening with Tesla and Rivian and all that fun stuff. It's very fun to talk about, but you think about the actual consumer behavior and what people are actually buying for whatever reason, whether they didn't like the maintenance on it or the charging aspect to it or whatever it might be, this large percentage, a higher percentage of people than I would have ever guessed, went back to the internal combustion engines. So stuff like that, some of the consumer activity and stats is very interesting for our world because, we get, folks talking about, they need lighter polymers and lighter, faux leather and things like that for to make the cars as economical as possible. But obviously for your world as well, what's actually happening with consumers and EVs and things like that, if it is going to be a trend or if it's compressing or contracting, it was an interesting stat.
I mean, the biggest thing to me about EVs is you still have to have electricity. And
everyone forgets that aspect. Everyone's like, oh, electric vehicle. No one talks about that.
Now, I know a guy who has a Tesla, and his front license plate says powered by coal, because that's just the reality of it. You move the source of the CO2, and a point source is probably easier to collect than a mobile source, and directionally maybe that kind of makes sense, but it's still a big bridge to cross with all the infrastructure. You need to move more power. It's just a fact, right? Where we make solar and wind-based power isn't where you consume it, which means you got to move it, and that just becomes quite the challenge. I'm not saying clever people aren't working on this, and we watch them closely, and I think there's some working on not big three-bladed windmills, but these windmills that kind of spin on a cylinder with some blades on it that can really adjust. Actually, I think Bill Gates's foundation or something, companies working on that. It seems promising and less of a impact on the environment when you install that. So again, clever people are working it. I think the problem's pretty gigantic. So our industry's got to do a better job maybe of advertising how we help the world develop. All the health issues, food spoilage, just agriculture in general, and all the benefits that come. We have a pollution problem, as everyone knows, and we got to take care of plastic in the oceans. But, to me, it's about collecting and containing, and then we'll figure out the best way to reuse it in the long run.
Yeah, and one of the things you mentioned too, that you're kind of looking on a global basis, that I think that same conference, there was a separate presentation talking about different regions, and it mentioned something about India being one of the largest, I forget if they're the number one or one of the top, population, per capita. But then there's only I think it's less than 10% of the overall Indian population has access to electricity, and therefore, various products that are derived from PVC and things like that, which we spend a lot of time in. So you look at something like that, markets that have room to grow and will be expanding over the coming years or decades. When you think about regions and where investment's happening and things like that, I mean, you got to assume, that's one of those regions that's really going to play a major role in a wide variety of different ways.
No, I have a slide that demonstrates this. I show the power generation in North America, and I show the power generation in Africa, the continent and broad, and the population. And in Africa, there's 3 times the people that there are in North America, and they have only 10% the power generation. I mean, you can imagine, even if they get to 20% or 30%, not even in par with us, that's a lot of electricity.
Oh yeah,
that has to come from somewhere. I mean, it's just a reality of where we're at. And you don't want to say you can't have power. And they tried solar panels, and it's just not reliable enough yet. Maybe again, clever people will solve that, but it's still not the technology off the shelf that anyone can grab and they can apply somewhere in Africa.
Yep. Well, one of my favorite questions to ask folks that come on the show, and you always get a variety of different answers. You ask people to kind of pull out their crystal ball and talk about what's to come for the year. Obviously everyone wants to know what's going to happen in the next 12 months and make business, strategy and plans accordingly. I know we've obviously talked about a variety of different aspects, all of which, play a role in planning for the year and things to keep a close eye on. What would you pass along as kind of the 2 or 3 things you're keeping a close eye on, and maybe some of your kind of forecast for the year? What are you keeping an eye on for this year, and what are your thoughts for the rest of 2024?
I think like real estate, it's location. So I think as I look at regions of the world and how they're going to perform, and this is about margins at the end of the day. So, cost will move, prices will move. It's really about margins. And when you're overbuilt, the high cost guy is going to be, having to ebb and flow between in the red and in the black, and going to have to make those decisions. So I say, Asia, I think China, Northeast Asia is part of Southeast Asia. They're going to be challenged. Europe, they're reducing operating rates across the board just because of cost and demand's weak and stuff is able to flow in. So it's that location is important because North America, we're going to be better off. We have plenty of gas. Gas demand was kind of weak. This winter, we'll have to see where it goes this summer. If we have another hot temperature in the south and consume a lot, we'll have to see, what happens in the Middle East. They have plenty of gas. So these advantages, I think, is all about location. So it could be good for some and bad for others. And now we're just watching financials like everyone else. What's going to happen to China, China's recovery. The real estate bubble has hit. They've had some issues with employment of the 18 to 30 year age part of the population. How is that going to play out? Are they going to recover? They just lowered interest rates, I think, on housing, so they're trying to spur some activity. That really is a big engine for growth, whether they make stuff for Chinese consumption or they make stuff to re-export to the rest of the world. I think that's going to be pretty important how China plays out. And you say if China catches a cold or sneezes, we all catch a cold with them. So that's kind of where we're at. The U.S. economy seems to be doing okay, but we're watching the elections just like everyone else. And if one guy gets elected or the guy gets reelected, we know that the policies are going to be completely reversed or stay the course. And I think that just causes uncertainty. It's hard to invest in this industry if you look forward. We've overbuilt. It's going to take a while to consume everything we've overbuilt, to fill that out. And to be quite frank, as we look at announcements in Asia, we got another gigantic wave coming, I think, in 27, 28 of new capacity in China mostly. Why China? Well, because they're still net short and they can build things cheap and they want to have people building things because that's employment. And, so maybe it takes longer to get better. Normally these cycles are 7 years. It's a dip, it goes up, it dip. It seems like we're kind of in a low for the foreseeable future, I guess, is what we're thinking right now.
Sure. Yeah, a lot of trends, a lot of topics, a lot of things in the news or in policy to keep an eye on to try to put that all into your magic formula and make an equation to make business decisions for the coming month, quarter, year. But
what's interesting is we hear governments deferring some of these policies they put in place, right? I know, for instance, a big Lego blocks have stopped using recycled material to build their blocks because it's just not competitive. It's just hard to deal with, and they have problems. I think in the UK, in California, they're all delaying EV adoption. California says, okay, we'll take nat gas for a longer time. We know solar is not the answer. So I think society's kind of putting some pressure on the politicians saying, okay, yeah, we all want a greener planet. We all live in the same world, but, we don't have endless pocketbooks either. And we got to manage this transition in the right way, or, we're all doomed to fail. It's just going to could get pretty ugly for a lot of folks.
Sure. Well, Steve, I appreciate everything you've shared. It's been a lot of really good information, a lot of stuff I've learned a lot, just from chatting here. What is the best way for folks to connect with you or with the company, and then maybe, see you out in the field? I know you guys host a few shows and conferences throughout the year, and you yourself presented a few. How can people connect with you?
Yeah, so look up Chemical Market Analytics on Google or wherever your web search engine. You can find us. We have some free stuff out there, but we have a lot of stuff that's publications that you got to subscribe to. We do have a big conference coming up, so thanks for that. Our World Chemical Forum in September here in Houston. So, we have speakers coming from industry, high-level folks. We have people coming from around the world. So, a well-attended event. It's kind of the benchmark for that space. And we have, as subscribers, you can get webinars. We talk about what's going on in the industry. And you can find us often at different industry events, the big AFPM events coming up in March. So most of us will be there. We'll have a salon in the Marriott River Center. Come walk by, come chat with us, see what we have. That's what we do. We're really here to help our clients make better decisions. We're about intellectual property that gives them guidance. We don't have all the answers, but we have a lot of situations and scenarios that we talked about today during the talk that we've weaved them into our view, but we know our view will change, and we're happy to kind of go over our assumptions, work with you, change those assumptions, and give guidance how we see the world playing out. That's what we're about. We're about helping you make better decisions, short term and long term.
Well, that sounds great. We appreciate it. I will put a link down below in the show notes for the website, and I'll put your email address as well, if that's all right by you, so folks can reach out if needed.
Ben, thanks for the invite. Yeah,
Absolutely, Steve. Thank you for coming on. It's been great having you on. Would love to have you on with some regularity. Maybe come join us up here in the studio in Jamestown. If you ever make it up this way, we'd be happy to have you.
Okay, great.
Awesome. Well, thanks, Steve. And for everyone out there listening, thank you for streaming, whether you're on the audio version or potentially looking at us on camera here, somewhat virtual, but also here in our podcast studio here in Jamestown. Steve, thank you again. Great to have you on. Great conversation. We very much appreciate it. And we will catch you on the next episode.
All right, great. Thanks.
Material contained on this podcast is provided by the chemical company solely for informational purposes. The information is not guaranteed to be correct, complete, or up to date. The information in the podcast is intended solely as a general education aid. TCC is providing this podcast as a public service, but it is neither a legal interpretation nor a statement of TCC policy. Reference to any specific product or entity does not constitute an endorsement or recommendation by TCC. The views expressed by guests are their own, and their appearance on the program does not imply an endorsement of them or any entity they represent. Views and opinions expressed by TCC employees are those of the employees and do not necessarily reflect the view of TCC or any of its officials. All statements, comments, and opinions presented are made in the context of robust dialogue and freedom of expression. TCC assumes no responsibility for any consequence relating directly or indirectly to any action or inaction taken based on the information in this podcast. While TCC strives to keep the information in the podcast accurate, complete, and up to date, we cannot guarantee and will not be responsible for any damage or loss related to the accuracy, completeness, or timeliness of the information. TCC assumes no liability for any errors or omissions in the content of this podcast. The information contained on the podcast is provided entirely on an as-is basis with no guarantees of completeness, accuracy, usefulness, or timeliness. Thank you for streaming the View from Jamestown podcast edition.
Like and subscribe for more.